with MoneyWeb. My name is Hannah Barry and I'm chatting to Warren Ingram of Galileo Capital about local versus offshore investing. Now Warren, this can be quite a sensitive and certainly an emotional topic for us South Africans, especially for those who are optimistic about the country, but there are concerns about where investors certainly should be putting their money. The question is, should we be putting it here? Everyone's worried about the future of South Africa. Is it the next basket case in Africa?
I don't think so. I mean, I think we see the commentary from potentially well-respected economists and market commentators talking about South Africa and saying, you know, that the rand is on a slide to oblivion, and our stock market's such a difficult place and the economy is so bad. And then we do have real problems around, you know, our political situation, the labor action that we have, which is really violent. And what happens is it unsettles investors. And then when the rand is falling out of bed, as it has been for the last while now, it tends to drive people to send their money overseas. And I think what happens is we make the same typical mistake we make as all investors in any market condition. Once a trend starts in a particular direction, if it carries on for long enough, we start to believe that that's the only direction that it'll ever go. So for example, with the rand, we believe that the rand's only ever going to get weaker. It's only going to get to 20, 30 to the dollar, and you would do really well now just to get all your money out of the country. And that really doesn't make sense to me. I think we've watched this movie before. If we think back to the early 2000s, the rand went all the way out to the dollar and got really weak, actually against the dollar, the pound, and the euro. And it came all the way back. You know, I remember it coming all the way back to R5.50 to the dollar. So sending your money out and believing all those commentators who tell you that we're the next basket case, I think would be a real mistake.
You mentioned the rand, and as you say, in the early 2000s, I think 2001, we saw it fall 26% or so within 3 months to the US dollar, but it recovered. Market commentators, economists, as you say, aren't optimistic about the rand's recovery at this stage. Do you think we could see it reach levels of 20 to 30 and then bounce back to 550?
Well, and the only thing I can tell you about my rand predictions is that I'll always be wrong. So what I would say is in the short term, it could get a lot weaker, and I think, you know, that those will always be short-term issues. And what you find with the rand is it steps out when it's weakening. In other words, it really drops down quite quickly and it becomes newsworthy and it causes a bit of panic. But when that trend reverses, it does it very slowly and very gradually, and we don't really notice it until one day we all of a sudden look back and we go, oh, it's at 8 or 9 to the dollar. So I would say that that's exactly what's going to happen. You know, the rand is moving in line with all the major emerging market currencies. All of those currencies have weakened against the dollar and the euro and the pound, and that trend will reverse again. So this isn't a South African story with our unique politicians and our unique economic situation. This is a global emerging market story, and therefore, you know, if overseas investors decide one day that they want to buy emerging markets again, which they will do, because every cycle does turn, then you'll find the rand does strengthen again.
So this is really a story of dollar strength versus rand weakness, and you mentioned the other emerging market currencies that are also weakening to the US dollar. The US economy is looking exceptionally strong though at this stage, and there are lots of concerns about the US raising interest rates as early as June, which would see somewhat of a capital flight from South Africa and other emerging markets. Are you not concerned at all about that?
No, I'll tell you why. I mean, when you make that decision to invest your money overseas, you're not worried about the next 3 or 6 or 9 months. You're worried about the next 5, 10, 15, 20 years. And what happens in the next few months is going to be an absolute little blip in a graph if you had to look at the graph of what's happening with your investments over that time frame. So I think focusing so much energy on what's going to happen now is a real mistake. And what happens is we get caught up in this short-term thinking and we send our money out at 12 rand to the dollar, for example, and then we look back in 5 years' time and we realize that actually the rand's now back at 8 and we've made a mistake. So I think what you should be doing when you make that decision is make a structural decision for yourself about your own money. Don't worry about the news and what commentators like me are saying about the rand. You've got to make those decisions for your own situation.
Let's look at the local stock market. The Offshore index is at all-time highs. Many people saying that it's overvalued. We're going to see a market correction. It could be a very ugly market correction. Is that something that you're watching very closely? Is the Offshore index overvalued?
So I think it's getting expensive, but to me the actual index level, that 53,000 for argument's sake, isn't a trigger for me. I think it's a piece of information, but it's not something that would drive an investment decision for me. What I always look at is what's the price earnings ratio of the market. In other words, if the price today is R1 and or 17 Rand, let's say, and you're making currently R1 worth of profit, then a price earnings ratio of 17 is what you've got. In other words, it's going to take 17 years worth of profits to pay for the price today. In our stock market, that's typically quite expensive. It's not the most expensive it's ever been. It's regularly gone above 20, but your long-term average for the stock market is around 14 or 15. So is our stock market looking a little bit expensive? Yes, but it's not in that territory of where I'm saying I'm starting to panic or I'm starting to really worry about what I'm going to do with my money. Plenty of things could happen that would unfold where our market actually becomes more reasonable value without the prices actually dropping. That's a possibility.
Assuming that you should invest some of your capital offshore because diversification is a good thing for investing, how much is enough in terms of offshore investments?
So what I would say to anybody is that over time, once you start building up your investment portfolio, you should have about 25% of your money overseas. That's a good structural diversification, and that would be the absolute minimum that I would say to anybody, because our stock market itself is already massively diversified across the world. But if you are one of the world's globally wealthy people or South Africa's globally wealthy people, then potentially you should increase that to about 50% of your money. But for most of us ordinary Joes who are planning to live in the country here, I would say 25% is a good allocation overseas.
Let's come back to domestic factors. The Offshore Index historically has not represented what's happening on the ground in South Africa. We have very low levels of GDP growth at the moment, labour unrest, public sector wage issues, electricity issues, lots of difficulties and challenges that we're facing as an economy. And the Offshore Index is not reflective of that. Do you foresee a time when it will reflect those on the ground challenges?
I don't see it. I'll tell you why. If you look at our big companies on our stock exchange, so South African breweries, Steinhoff, Sasol, there's a whole range, British American Tobacco, their futures are not dictated by the South African economy alone. They are global businesses that work all around the world. So what happens here, for example, to South African breweries, might have a 10 or 20% impact on breweries' overall profits and overall revenue. So it's a factor, but it won't determine breweries' future. So when you're making an investment decision to invest in South Africa, what's going on here is relevant, but it won't necessarily decide the future of the stock exchange and your investments there.
Warren Ingram is with Galileo Capital, and I'm Hannah Barry of MoneyWeb.